Hello everyone, this is financial reporting. Today I would like us to learn how to prepare the published financial statement. So we shall learn the presentation of statement of comprehensive income and also the presentation of the statement of financial position, that is the balance sheet. So this is a topic in our financial reporting syllabus, that is the published financial statement. Remember, this is a question that must be tested in our exam. In many cases, you may not know how it is phrased, or you may not know that this is a question that requiring to prepare on a published method. So as we continue, we shall see how to know that we are required to prepare these questions in a published form. So published, when we talk of published financial statement, there's nothing new that we are learning. It is just the normal financial accounting or financial reporting, just the way we used to be asked to prepare the income statement, and we prepare the statement of financial position. But here, when we talk of a published financial statement, the only thing here we change is the format of our question. So as we continue, you learn that we don't bring all expenses in our income statement. Expenses are classified. Expenses are classified into cost of sales, administration expenses, sales and distribution expenses, and finance costs. So all expenses should fit. All expenses should fit under those four categories. All expenses must fit under those four categories. So that is some expenses are included under cost of sales. Other expenses are included under administration expenses, others under sales and distribution expenses, and others under finance cost. So when you are told to prepare the published income statement, you cannot bring, when you are preparing your income statement, you cannot bring expenses like telephone expenses, rent expenses, depreciation expenses. You cannot bring traveling expenses, postage. You cannot bring taxes, rent. All those expenses are not brought in as an item in the income statement, but they are classified under those four categories. So if you are not told if you are not told where to classify, if the examiner does not tell you that this expense is to be included here, we look at which category is it relevant, or maybe where does it fit most. Like an expense like postage, or simply an expense like office rent. Simply, when you talk of office rent, you pay office rent because you have a premises where you conduct your administration activities, and therefore office rent will fit in administration expenses. When we have an expense like the sales manager wages, sales manager wages. We have an expense called delivery van driver wages. Delivery van driver wages. We have an expense like advertising expenses. So I hope you can see that all those expenses are incurred for the sake of selling, So delivery van driver wages, you are delivering a stock maybe to customers, and therefore that one will come under sales and distribution expenses. Another expense like interest on loan. It is an expense, yes. Interest on loan is an expense. Debenture interest is also an expense, but we don't have debenture expenses in our published income statement. We don't have interest on bank loan in our income statement, and therefore since we have finance cost, all these expenses will fit in finance cost expenses. So this is our format. This is our format for our published income statement. Published income statement look like this. So there's something that I would like you to understand here, that we don't do workings in our income statement. We don't do workings in our income statement. What I mean by that is that when you have revenue, you don't start adding some figures on your income statement. You do the working outside. Then you bring your one figure on your income statement. When you go to cost of sales, you don't come here to start writing that to get the cost of sale. You started with opening stock, you add purchases, you less closing stock to get a figure for the cost of sales. So we don't do that in our income statement. We do those workings outside. We label that working, like for example, the cost of sales. You can say that this is working one. So working one, you did you took the opening stock, you added purchases, and you deducted the closing stock to get a figure for the closing stock, to get a figure for the cost of sales. So that cost of sales that you get there under that working is the figure you bring in our income statement. So I'd like you to observe that we have one line where we have sharings, all the way from revenue down to where you get the retained profit carried down. Those figures are on one line. And there is no additions that we are doing inside our income statement. There is no additions we are doing in our income statement. You are just writing an item like revenue, you put a figure. You write an item of cost of sales, you put a figure. Then if you did working, maybe you did working one, you show that this figure was after doing working one. Then your working one should be seen somewhere in your workings. Then when you take revenue, you less your cost of sales. Revenue, you less your cost of sales. You will get the gross profit. And after gross profit, we add other incomes. And after adding other incomes, you less expenses. And you are saying that expenses are administration expenses, sales and distribution expenses, finance cost. finance costs. Those are the expenses that we are deducting so that we can get the net profit before tax. So that we can get the net profit before tax. Obvious, if we have the net profit before tax, we less the income tax. When you less the income tax, you get the net profit after tax. You get the net profit after tax, net profit after tax, and after getting the net profit after tax, we pay dividends. We pay dividends. We pay dividends. We pay dividends. So after paying dividend, remember to show that you paid, you are putting a negative sign, or simply you are putting it into brackets. After paying dividends, you get retained earnings for the year. You get retained earnings for the year. So retained, when you get retained profit for the year, you add retained profit brought down. You add retained profit brought down to get a retained profit carried down. To get retained profit carried down. So the figure we have for the retained profit carried down is the total figure for our, or it's simply the final figure for our income statement. And remember that this is the figure we take to the balance sheet. This is the figure we take to the statement of financial position. When we are preparing our statement of financial position, remember our format for the balance sheet, we have non-current assets, we have current assets, then you go to finance by section. You go to finance by section, and on the finance by section, remember if we have shares, we have ordinary share capital, share premium, retained earnings. So the retained earnings we put in our balance sheet is this figure, that we have, here, retained profit carried down in our income statement. So this is the figure we take to the finance by section of our balance sheet. Finance by section of our balance sheet. So so that is how we are supposed to prepare. That is how we are supposed to prepare our published income statement. In most cases, you will not be told to prepare, the examiner will not use the word income statement, but the examiner will use the word a statement of comprehensive income. The statement of comprehensive income. So the statement of comprehensive income is the income statement. So we should not get confused. When you are told to prepare the statement of comprehensive income, you are simply asked to prepare the income statement. But please do not change the question. If the examiner tells you to prepare the statement of comprehensive income, do not write that you are preparing the income statement. Prepare what you have been asked to prepare under the required section of the question. So I hope we are together. So I'm saying, if the examiner requires you to prepare the statement of comprehensive income, write that you are preparing the statement of comprehensive income, even though you know that this is the income statement. So do not change the words of the examiner. I hope we are together. So so this is how we shall solve this. Then we shall go to the balance sheet. From there we shall go to the balance sheet. Remember, when we talk of published, financial statement, everything we are simply publishing for the sake of the members of the public. You are preparing your financial statement as simple as possible, so that those people who did not attend an accounting class. So not all shareholders are accountants, and therefore they would like to understand the financial performance of their investment or their business. So we try to simplify. We try to simplify for the sake of our shareholders and any other member of the public, to simplify this work as much as possible. So we are saying that not everyone who attended the accounting class, and therefore when you try talking of depreciation, reducing balance method, depreciation, historical system, or simply the you are depreciating on cost, or you are depreciating on straight line basis, not many people will understand what you are doing, and therefore we tend to do the working separately, and now we classify all those expenses. You call that one cost of sales. Cost of sales. So in most cases, the depreciation expense is included at the cost of sales. Is included at the cost of sales unless the examiner tells you to present it somewhere else. You know, in some questions, you'll be told that plant and machineries are depreciated at 10%, reducing balance. So when you depreciate that, then the examiner tells you that 10% of the depreciation is classified at the cost of sales. 50% of depreciation on a plant is classified at the administration expenses. Then you are told 40% of plant depreciation is classified at the administration expenses. So you do exactly as that. You don't change that. But in case the examiner is silent, is not directing you how we are classifying depreciation, we prefer, or it fit most in the cost of sales. The cost of sales. So when we prepare the income statement, that is how we shall be doing. To the balance sheet, we don't bring many figures. So when we talk of the balance sheet, we only have the non-current asset, PPE. So PPE will include all the fixed assets. So when you write PPE, that is plant, property, plant and equipment. The figure for PPE will include the figure for land, the figure for buildings, the figure for computers, furniture, equipment, all fixed assets that we have. They will be included under one figure for the property, plant and equipment. The property, plant and equipment. So another thing we would like us to be aware is that whenever we are preparing our balance sheet, we are required to do a working that when you are doing financial accounting, that is our financial accounting FA, there is a schedule that you are preparing. That is the fixed asset movement schedule. Fixed asset movement schedule. We shall bring it in when it comes to preparation of our PPE, or simply when we will be preparing our non-current assets. So we shall do a working for a fixed asset movement schedule. So then under some circumstances, you can also be told to prepare the statement of changes in equity. The statement of changes in equity, we shall still prepare that. but statement of changes in equity is simply what we have under the equity side of our balance sheet. That is the finance by section. Remember, in financial reporting, equity is ordinary share capital, share premium, preference share capital. We also have retained earnings, general reserve, capital reserve, revaluation reserve. All those reserves are part of our equity. So the moment you are told to prepare the statement of changes in equity, that is simply what we factor in. So that is my introduction for now. That is my introduction for now. I would like now to solve a question. There's a question that we shall solve there. I believe that I have sent that question to you. That is the published financial statement, and that question look like this. So this is the published financial statement question one, page 1. So that is page 1. So that is page 1 of our question. This is page 1. So that is the question that we are going to solve very soon. I'm working on that, and I'll be sending to you very soon. So